Hi, I would like to talk about the current market volatility. We at Singularis, what we think about it. The last 15 years of our Singularis journey, we have seen at least 11 to 12 times market correcting more than 10%. So these kind of corrections are not new to the market. Most importantly, the COVID correction, market fell close to 40%, to be precise, 38%. Market hit the low of 26,000 levels. From there, in the next 5 years, market reaches 76,000 plus levels. I'm talking about BSE Sensex. We have seen phenomenal growth in the market in the last 5 years. But what has happened is the corporate profits are not kept the space with the way the valuations have gone up. So that could be one of the reasons. Because of higher valuations, the mid and small cap is correcting more. Large cap has not delivered very high returns compared to the mid and small cap, so the corrections are reasonably lower, but mid and small cap correction is much more because of the higher valuations. That is one of the reasons for the market correction. And second, the US president's new tariffs and the policies are also creating some amount of panic in the global economy. And FIIs are selling across emerging market, and India happens to be one of the emerging markets where they are selling in a big way. So that has also led to market corrections, even though domestic institutional investors are buying and the retail is also participating, but it is not good enough to hold the market. So there is correction happening. So what do we do in these kind of times? Number one is that we have sent a mail about almost 2 years back to all our investors regarding small and mid cap, and we have told it's time to do a little bit of rebalancing and move some of the money into large cap. And if you're doing SIPs currently, in fact, you should consider increasing the SIPs, because SIPs will benefit the most when market is volatile, because it's about averaging. So we need to go through, the SIP should go through ups and downs, and when the down cycle is happening, we accumulate more units. So continue the SIPs, continue the STPs. And what if you have more money to deploy? Definitely you should consider deploying it, but the deployment should happen through a STP route over a period of 6 to 12 months. We expect till December, we think that the market will remain range bound or volatile till this calendar year end. So this is a great opportunity to add more investments through staggered manner. And most importantly, ensure that you have your eye on your goals, because there will be various reasons at every time due to economic cycles and policies. All of that, market will go through its own corrections and cycles. We have to ensure that our goals are intact and we keep our eye on our goal. And most importantly, power of compounding. So the time in the market is more important than the timing the market. In scenarios like this, we have to remember the power of compounding and stay put for longer duration. Because if we try to time it and try to do some, looking for exact time, or well, wait for the correction so that I'll deploy money, we may not get that right. So let us focus on the goals and the power of compounding. And what I also like to share is that despite all these uncertainties, our fundamentals of our country has not changed, be it demographics, the new policies promoting manufacturing and consumption, all of that remains intact. So in every growing economy also, there will be cycles. But what we have to remember is the long-term fundamental looks intact. So we believe next 3 to 5 years, market will deliver reasonably good returns. But we have to ensure this opportunity of this volatility, we have to deploy more investment, continue the SIP. In fact, we should increase the SIP and benefit from this kind of a market fall. Thank you for listening. We are always available. If you need any clarification, reach out to us. Thank you. Happy investing.